Hey everyone, and welcome to another deep dive. Today we are going to be taking a look at ETFs.
Okay.
But not just ETFs in general. The listeners send in a bunch of stuff and they seem really interested in
Hmm.
how ETFs are kind of affected by like the big picture economy. You know
Yeah.
what I mean? Like all those things that are
Yeah.
affecting the markets like as a whole.
Yeah.
So that's what we're going to be looking at today.
Yeah. It's like if you're sailing a ship,
Okay.
you need to understand the winds and the tides,
Right.
not just how to like work the boat.
Yeah, perfect analogy. Okay, so I guess what we're really talking about here is macroeconomics, right? So like
Right.
inflation and interest rates and all those things.
Yeah, all the stuff that makes headlines
Yeah,
or
exactly.
affects our wallets.
Right, exactly. I like to think of it as like instead of just worrying about like your grocery bill,
Yeah.
we're thinking about like the entire supermarket,
Mhm.
like the prices in the entire supermarket and then like even bigger than that.
All the supermarkets.
Yeah, and like where the food's coming from and all of that.
Yeah, the whole system.
Okay, so how does all of this supermarket stuff
Right.
affect ETFs?
Well, you can think of ETFs like baskets of assets
Okay.
that are put together to like reflect a certain sector or index or investment strategy.
Okay.
And so when the macroeconomic winds shift,
Right.
some of those baskets like become
Okay.
more attractive than others.
Okay, that makes sense. So let's take inflation, for example,
Yeah.
because that's been a big topic lately.
Yeah.
And one of the articles you sent in talked about commodity ETFs.
Mhm.
So things like gold.
Yeah. Well, gold, oil.
Yeah, oil, exactly.
Yeah.
And how those often do well when inflation is high.
Right. It all comes down to hedging
Okay.
because when your currency is losing value
Mm-hmm.
because of inflation,
Right.
people look for assets that will hold their value,
Okay.
like commodities.
Okay, so it's not just about the commodity itself. It's also about how easy it is to get in and out of those investments.
Exactly. And that's a key advantage of ETFs,
Okay.
especially compared to like traditional mutual funds,
Okay.
because ETFs trade all day long.
Oh, right. Like stocks.
Yeah, like stock.
Okay.
So you can react quickly to like market shifts or
Yeah.
news
Right.
or even macroeconomic announcements and stuff.
So it's all happening in real time.
Yeah.
That's really interesting. One of the reports that you sent in talked about the recovery after the pandemic
Mm-hmm.
and how both growth-focused ETFs,
Mhm.
you know, the ones that are like in tech and healthcare,
Yeah.
and cyclical ETFs, like
Right.
travel and manufacturing.
Yeah. All those benefited.
Yeah, they all had this big surge.
Yeah, it's a great example of how ETFs can reflect but also anticipate
Right.
like the market sentiment.
Mm-hmm.
So as the economy began to recover,
Okay.
investors sort of flocked to those ETFs
Right.
because they were betting on those sectors
Right.
to grow.
Yeah, it's like they were designed for that moment.
Yeah.
That's really interesting. And it's not just limited to domestic markets either, right?
Right.
Because you sent some material about how ETFs can make it easier to invest internationally,
Yeah.
which used to be kind of hard for like the average person.
Right, exactly.
Right.
Yeah, you can invest in Asian growth markets
Right.
or Europe's green energy transition,
Yeah.
all without needing to be an expert
Yeah, exactly.
in those specific regions.
So it's like having a passport
Yeah.
for investments all over the world, just
Yes.
right there in your brokerage account.
Mm-hmm.
That's so cool. And that ease of access
Right.
combined with like the diversification
Yeah.
that a lot of ETFs provide,
Uh,
it's really like opened up investing.
it's democratized it.
Yeah, exactly.
Yeah,
It's not just for super rich people anymore.
exactly.
Okay, so we've talked about how ETFs are affected by things like inflation
Yeah.
and how they react to like sudden changes in the market. But a lot of the research that you sent in also highlighted how
Totally.
ETFs can actually do really well
Mhm.
during tough times.
Yeah.
Like they don't just survive, they thrive.
Yeah.
And you had some good stuff about the COVID crash in 2020
Right.
and the role that bond ETFs played.
Exactly. Like when everything was super uncertain
Mm-hmm.
and people were freaking out about bonds,
Right.
bond ETFs were like
Okay.
providing liquidity
Yeah.
and price transparency.
So they kept things moving
Yeah.
when the bond market was basically frozen.
Yeah. Exactly.
That's amazing. And a lot of experts say that this ability to handle like the ups and downs
Right.
has to do with some key economic principles.
Yeah.
You mentioned something called the efficient market hypothesis.
Uh-huh.
What is that again?
So that hypothesis basically says that all the available information,
Mm-hmm.
like good news,
Okay.
bad news,
Yep.
warnings about a recession, whatever,
Okay.
it's already baked into the price of the asset.
Yeah.
So trying to outsmart the market is really hard.
So that's where ETFs come in.
Exactly.
Because instead of trying to pick individual stocks
Yeah.
and potentially like missing something important
Mhm.
with an ETF, you're kind of capturing the whole market
Exactly.
by tracking like a broad index.
Yeah, or a specific sector.
Okay, so it's more about going with the flow of the market
Mhm.
than trying to beat it.
Yeah, you're embracing the wisdom of the market
Yeah, exactly.
instead of trying to be like a stock picking genius or whatever.
Okay, that makes sense. So we've talked about how these ETF baskets are
Yeah.
affected by things like inflation
Mhm.
and how they react to like those sudden market changes.
Yeah.
But we've also seen that their structure is kind of
Right.
designed to weather those economic storms.
Exactly.
But you were saying earlier that there's even more to the story.
Oh, yeah, there's a lot more.
Okay.
We've been talking about ETFs kind of generally,
Right.
but there's a whole world of nuance
Okay.
within this universe of ETFs. You know, there are different types
Okay.
that cater to different needs and strategies.
Oh, this is where it gets really interesting.
Yeah.
Okay, so in your notes, you mentioned something called factor-based ETFs
Uh-huh.
and also smart beta.
Yes.
Those sound kind of cool.
They are really cool.
Okay.
And they really show how ETFs have evolved beyond
Okay.
just tracking basic market indices.
So what are they?
So factor-based ETFs, for example,
Okay.
they let you target specific investment factors
Okay.
that have historically driven returns.
Okay, so what kind of factors?
Things like value,
Hmm.
growth,
Okay.
momentum,
Mm-hmm.
quality,
Okay.
even low volatility.
So if I believe that like companies with strong momentum, like
Yeah.
their stock prices are going up, they're
Yeah.
going to do better, I could find an ETF that's like focused on that.
Exactly.
Okay.
So it's a more targeted approach.
Okay.
You know, aligning your investments with
Yeah.
specific beliefs about what drives markets.
Okay, and what about smart beta?
So smart beta,
Is that similar?
yeah, it's related.
Okay.
It aims to outperform traditional market cap weighted indices.
Okay, wait, remind me what's market cap weighted again?
So market cap weighted just means that the weighting of a company
Okay.
in the index is determined by its market capitalization.
Okay.
So bigger companies
Right.
have a bigger impact
Gotcha.
on how that index performs.
Okay. And smart beta tries to do things a little differently.
Right. Instead of just following market cap blindly,
Okay.
smart beta ETFs might use different weighting,
Mm-hmm.
maybe focusing on things like value or dividends
Okay.
to potentially improve returns
Okay.
or lower risk.
So it's like adding an extra layer of like smarts
Yeah.
to the way the index tracks things.
Exactly. Tilting the scales in favor of certain characteristics.
Okay.
And that's where the line between like passive and active investing
Yeah.
gets a little blurry
Okay.
because ETFs are usually considered passive,
Right.
but these smart beta strategies are
Yeah.
bringing in a little bit of active decision making.
It's really interesting how ETFs are becoming more and more
Yeah.
customizable. You know,
Right.
it's not just about buying the whole market anymore.
Mhm.
It's about like picking and choosing
Yeah.
exactly what you want.
Exactly.
And this is happening because of like new financial technology
Mhm.
and also because we're understanding markets better.
Right.
Which brings us back to macroeconomics
Yep.
and how it affects ETFs.
Because even with these fancy ETFs,
Yeah.
those big macroeconomic forces are still in play.
So we always have to keep those in mind.
Exactly. Those winds and tides we talked
All
about.
right.
They're always there.
This is way more complicated than I thought it was going to be. We've
Yeah.
gone from like basic definitions of ETFs to the mechanics of how they trade,
Yeah.
their global reach. And now we're talking about smart beta.
It's a whole world.
Yeah, it is.
Yeah.
But I have a feeling there's even more.
Oh, yeah. We've only just begun to peel back the layers of the onion.
Okay.
We talked about how ETFs are resilient
Yeah.
during past crises.
Mm-hmm. But the future is full of new challenges and opportunities. Okay, I'm ready for the next layer.
Right.
What's coming up for ETFs in this crazy world?
Well, so we've talked about how ETFs can be like
Yeah.
really powerful tools
Mm-hmm.
for navigating the market.
Right.
But it's important to remember
Okay.
they're not like a one-size-fits-all solution.
Right. Not every strategy works for every person.
Exactly.
Or every time.
Right.
So, like, when might ETFs not be the best choice?
Well, one scenario is if you're looking for something
Okay.
very specific.
Mm-hmm.
Let's say you're like really interested in a super niche company
Right.
or a tiny sector.
Yeah.
you might not find an ETF that
Right.
has that laser focus.
So it's like if you're looking for a rare gem,
Yeah,
you kind of have to go digging yourself
exactly.
instead of relying on a pre-assembled collection.
Right.
Okay, that makes sense.
Another thing to consider is risk tolerance.
Okay.
So while ETFs do offer diversification,
Mhm.
which can help like smooth out the blurs in the market,
Right.
they still move with the assets they track.
So if the whole stock market tanks,
Yes.
my diversified ETF is probably going to go down too.
Right. But just maybe not as much.
All right.
Yeah,
So diversification within an ETF
Mhm.
doesn't mean it's immune
yeah.
to what's happening in the market overall.
Right.
Okay, so if I'm like super risk averse, like I really want to protect my money,
Yeah.
there might be other options that are better.
Right.
And
Exactly.
then this all kind of ties back to what we were talking about earlier
Yeah.
about macroeconomics.
Right.
Knowing how something like rising interest rates
Mm-hmm.
could affect certain sectors
Right.
could help me pick the right ETF.
Absolutely.
Like, for example, if I think interest rates are going to go up,
yeah.
I might want to look at ETFs that focus
Mm-hmm.
on financial companies.
Right. Because they tend to do well
Yeah.
in that environment.
Okay, so it's all about like matching
Yeah.
my ETF choices
Uh-huh.
with what I think is going to happen
Exactly.
in the economy,
It's like having a compass to guide you.
even when things get rough.
Exactly.
And this is why that efficient market hypothesis
Right.
is so important.
Yeah.
Because if all the information's already out there
Mm-hmm.
and it's reflected in the prices,
Yeah.
trying to like be smarter than everyone else
Uh-huh.
and pick individual stocks is really hard.
It's almost impossible.
Right.
Yeah.
So with ETFs,
Uh-huh.
especially the ones that are tracking like broad indexes, you're not really trying to beat the market. You're
Yeah.
trying to capture the whole market return.
Exactly.
Okay. So it's a different way of thinking.
Yeah.
It's not about being a stock picking genius.
Right.
It's about going along for the ride.
Exactly. Participating in the growth.
Okay. And long term being like the key word there.
Yeah. Long term is key.
Because markets go up,
Mhm.
markets go down.
Right.
So we got to think long term.
Yeah. You got to ride those waves.
Okay.
And ETFs are designed for that.
So we've talked about situations where ETFs might not be ideal.
Right.
And we've talked about some key economic principles
Yeah.
that kind of make them successful. But you were saying earlier that there's more to this story.
Oh, yeah, there's more.
Okay.
So we've been talking about ETFs
Right.
kind of generally,
Mm-hmm.
but there's this whole world of nuance
Okay.
within the ETF universe.
Okay.
There are different types
Mm-hmm.
that are designed for different needs and strategies.
Wow, this is where it gets really interesting.
I know, right?
Yeah.
We touched on factor-based ETFs
Yeah.
and smart beta,
Yeah.
and those really demonstrate
Okay.
how ETFs have evolved
Okay.
beyond just tracking basic indexes.
So factor-based ETFs,
Yeah.
they let you target certain factors that
Right.
have historically driven returns.
Things like value,
Okay.
growth,
Mm.
momentum,
Okay.
quality,
Mm-hmm.
even low volatility.
So if I believe that
Yeah.
companies that have strong momentum,
Uh-huh.
like their stock prices are going up consistently,
Yeah.
they're going to outperform the market,
Mm-hmm.
I could find an ETF
Yeah.
that focuses on that.
Exactly. It
Yeah.
allows for a much more targeted approach.
Okay.
You can align your investments
Yeah.
with your specific beliefs.
Okay. And what about smart beta?
So smart beta strategies,
Mm-hmm.
they try to do better than traditional
Okay.
market cap weighted indexes.
Okay. Wait.
Yeah.
Remind me, what's market cap weighted again?
Oh, so it just means that
Okay.
the weighting of a company
Mm-hmm.
within an index
Okay.
is determined by its market capitalization.
Right.
So like the total value of all its shares.
Gotcha.
So bigger companies
Yeah.
have a bigger impact
Okay.
on the performance of the index.
And smart beta does things differently.
Right. So instead of just blindly following market cap,
Okay.
smart beta ETFs
Mm-hmm.
might use
Okay.
different weighting methods,
Uh-huh.
maybe focusing on value or dividends,
Okay.
try to enhance returns
Mm-hmm.
or reduce risk.
So it's like adding like a layer of smarts
Yeah,
to the index tracking,
exactly.
tilting the scales?
Yeah.
Okay.
And this is where that line
Okay.
between passive and active investing
Fine.
gets blurry
Yeah.
because ETFs are generally considered passive.
Yeah.
But smart beta strategies
Mm-hmm.
introduce an element
Okay.
of active decision making.
It's really interesting how ETFs are offering this level of like customization and
Right.
strategy.
Uh-huh.
It's not just about buying the whole market anymore. It's
Love
about
to.
targeting very specific parts.
Exactly.
Yeah.
And this evolution is driven by
Uh-huh.
new financial technology,
Okay.
and a better understanding of how markets work.
Which brings us back to that connection
That's it.
between macroeconomic and ETF performance.
It always comes back to that.
Because even with these more sophisticated ETFs,
Yeah,
we're still subject to those big economic forces.
exactly. Those winds and tides we talked about,
Right.
they're always shaping the landscape.
Okay. This is way more intricate than I realized.
Yeah.
We've gone from like basic definitions
Mhm.
to like the mechanics of trading,
Right.
global reach,
Yeah.
and now we're talking about smart beta.
That's amazing.
It is.
Yeah.
But I have a feeling there's more.
There is, we haven't even gotten to
Okay.
the good stuff yet.
All right.
We've talked about the resilience of ETFs
Yeah.
in past crises,
Mm-hmm.
but the future
Yeah.
has its own set of challenges and opportunities.
Okay. I'm ready for the next level.
Right.
What lies ahead for ETFs in this crazy world?
Well, it feels like we've gone on this whirlwind tour
Yeah.
of the whole ETF universe.
I know. It's crazy.
From basic definitions to smart beta strategies,
Great.
it's clear there's a lot more to ETFs
Mm.
than you might think at first.
Yeah, for sure. You mentioned that the future holds both challenges and opportunities for
Mhm.
ETFs.
Mm-hmm.
So what are some of the big trends on the horizon?
Well, one major trend is
Okay.
sustainability.
Okay.
So ESG investing,
Mm-hmm.
which considers environmental,
Right.
social, and governance factors,
Mm.
it's gaining a lot of momentum.
Yeah, I've definitely seen more ETFs
Yeah.
focused on things like clean energy and social responsibility
Exactly.
and ethical corporate governance.
Yeah. And that trend is only going to grow,
Okay.
especially as more investors,
Yeah.
especially younger generations,
Mhm.
demand more transparency.
Right.
They
Yeah.
want their investments to align
Yeah.
with their values.
So it's not just about making money.
Right.
It's
And
about
making a difference.
Yeah, making a positive impact.
Yeah.
And ETFs are making those kinds of investments
Yeah.
available to more people.
Exactly.
That's great.
Another trend is thematic ETFs.
Thematic ETFs.
Yeah.
What are those?
So these ETFs let investors
Okay.
tap into specific mega trends.
Mega trends.
Yeah, those big long-term shifts
Okay.
that are shaping the global economy.
Okay. Give me some examples.
Okay, so think about things like
Mm-hmm.
the rise of AI,
Okay.
the growth of e-commerce,
Mm-hmm.
the aging global population.
Uh,
There are ETFs
wow.
designed to capture all of those themes.
So instead of just investing in like tech in general,
Right.
I can pinpoint like
Yeah.
specific areas
Yeah.
within tech
Yeah.
that I think are going to do really well.
Exactly.
So thematic ETFs let me be more focused.
Yeah, they give you that laser focus.
So it's like I can invest
Yeah.
in the stories
Yeah.
that I think are going to shape the future.
I love that analogy.
It's so cool.
It really captures
Yeah.
the essence of thematic investing.
Okay. But with all these new options,
Right.
strategies,
Yeah.
how do I stay informed?
That's a great question.
Like, how do I make good decisions?
It really highlights the importance of
Mm.
continuous learning
Right.
and due diligence.
Okay.
You know, there are tons of resources
Yeah.
to help investors understand
Okay.
all the different types of ETFs, their holdings,
Yeah.
the potential risks and rewards.
So it's about doing my research,
Exactly.
staying up to date
Yeah.
on market trends,
Uh-huh.
and maybe even talking to a financial advisor.
Right. If you need help.
Okay.
Yeah.
Knowledge is power.
Absolutely.
Yeah.
Especially when it comes to investing.
And it's not just about picking winners.
No.
It's about building a portfolio
Mm-hmm.
that matches my goals,
Yeah.
my risk tolerance,
Uh-huh.
my vision for the future.
Exactly.
That's powerful.
It is.
It's about investing with intention
Mhm.
and purpose.
Right.
And ETFs can help me do that
They can.
because they're so flexible.
Yeah. And diverse.
This deep dive has been amazing.
It has.
We've learned so much about ETFs,
Yeah.
how they react to macroeconomics,
Mhm.
their real-time advantages,
Yeah.
their global reach,
Mhm.
and how they're constantly evolving.
Right.
And we talked about how important it is
Yeah.
to understand those big economic trends.
Absolutely. Those winds and tides
Right.
that shape everything.
Okay, so as we wrap up,
Yeah.
what's like the one big takeaway
Okay.
you want our listener to remember?
I would say this.
Okay.
ETFs are more than just investments.
Okay.
They reflect this dynamic interplay
Okay.
between economics,
Mm-hmm.
technology,
Okay.
and human behavior.
Wow, that's a good one.
Yeah. And when investors understand those forces,
Yeah.
they can really use the power of ETFs
Okay.
to build portfolios that are not only profitable,
Mm-hmm.
but also like
That's
align with their values
Yeah.
and their vision for the future.
I love that.
Yeah,
It's been great exploring this with you.
it has. It's been a pleasure.
And to our listener, thanks for joining us
Thank you.
on this deep dive into ETFs.
We hope you found it.
Yeah, we hope it was informative.
And inspiring.
And remember, the journey of investing,
Yeah,
it never ends.
it's a lifelong journey.
So stay curious,
Yeah.
stay informed,
Stay engaged.
and never stop exploring.
Never stop learning.